Today, home lending booms. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Well, as CanStar put it, November was a red-hot month for the housing market, with the value of new lending increasing across the board according to new data released today. The total value of new loans increased for the first time in 4 months, rising by 6.3%. to reach $31.44 billion in November, which is the largest increase since January 2021. The total value of new loans was also up 33.2% from a year ago. Eager to purchase property ahead of the holidays, owner-occupied borrowers returned with a vengeance. Lending for owner-occupiers increased for the first time in 6 months, going up by 7.6% in November to reach $21.34 billion, and that remains up by 17.2% from a year ago. That's also the biggest monthly increase seen since January. First-time home buyers gave investors a run for their money in November too. The value of new loan commitments to owner-occupied first home buyers also rose for the first time in 6 months, lifting by 3.7% from October to reach $5.38 billion in November. And investors remain undeterred by the competition, with new investment lending increasing for the 13th consecutive month, rising by 3.8% from the month prior to $4.6 billion in November. New investor lending also remains up a whopping 86.9% from a year ago. The value of new loans refinanced to newer lenders in November declined, though, from a month prior. But CanStar analysis of ABS lending data shows that Australian mortgage holders refinanced $15.72 billion worth of loans to a new lender in November. That's down 2.3% from October. Now, Steve Mickenbecker from CanStar said, "As if the housing market wasn't already hot enough, November is the first time in 4 months that new lending increased. Owner-occupiers strike back, with new lending for owner-occupiers resurging in November following 6 months of falls and doubling the monthly growth rate for investment lending. It's a nice feeling to go into the festive season with the homes sorted out for the upcoming school year. And even if first-time buyers jump back into the market, up 3.7% in the month, they're still down 6% on November 12 months ago. It's a long way back for this group when facing competition from investors who are borrowing 87% more than a year ago. The number of first home buyers was down 2,442, or 17% from November 2020, and the average they're borrowing is 56,000, or 13.7% higher. There is no question that 2021 was a year when a whole lot of would-be first home buyers moved further away from their goal. We can't afford yet another year of runaway prices in 2022. With CanStar listing 119 loans with interest rates below 2%, it's a bit surprising that refinancing has slowed in November. Rates are likely to be higher at the end of 2022, and now is still a great time to be jumping into a low rate and to get ahead before the inevitable increase. Now, the ABS more formally said that the value of new home loan commitments for housing rose 6.3% to $31.4 billion in November, seasonally adjusted, following 3 months of falls, according to the statistics from the ABS. They said that the value of new loan commitments for owner-occupied housing rebounded 7.6% in November. The rise was the first since May 21 and the largest since January 21. Owner-occupied loan increases were strongest in New South Wales, rising 9.6%, and Victoria, rising 9.7%, corresponding to restrictions easing in those states in October and November. At the national level, the average loan size for owner-occupied dwellings, which includes construction and the purchase of new and existing dwellings, rose to an all-time high of $596,000. And the average loan sizes reached new highs in all states and territories except Western Australia. Activity in the investor market was also strong. The value of new loan commitments to investors rose 3.8%, reaching a new all-time high of $10.1 billion. Investor lending has grown for the past 13 months and accounted for around 1/3 of the value of new housing loan commitments in November 21. The previous investor lending peak in April 2015 accounted for 46% of new housing loan commitments. Increases in investor loan commitments were strongest in New South Wales, up 7.8%, Queensland up 5%, and Victoria up 3.6%. All states rose, while both territories fell. And the number of new loan commitments to owner-occupier first-home buyers rose 1.9% in November, season adjusted, breaking the decline since January 2021. The number of these commitments was 17.4% lower compared to a year ago. Victoria had the strongest rise of 12.3% in the number of owner-occupier first-home buyer loan commitments. The number of those commitments was 6.7% lower than a year ago, after falling from record highs seen in the year. Increases were also seen in New South Wales, up 2.2%, and Western Australia, up 1.3%. Queensland fell 1.5%, and South Australia fell 4.6%. And finally, the value of new loan commitments for fixed-term personal finance rose 4.5% in November, season adjusted, driven by a 4.8% increase in lending for the purchase of road vehicles. And then the HIA came in with their own spin on the story. The value of loans excluding refinancing issued for housing towards the end of 21 was elevated as demand remained very strong, stated HIA senior economist Nick Ward. The ABS released the lending for households and business data for November 2021 today. The data provides statistics on housing finance commitments. The value of loans to owner-occupiers increased by 7.6% in the month of November. That leaves the value of loans to owner-occupiers 46% higher than 12 months ago. The number of loans to first home buyers increased in November and accounted for 34% of owner-occupier loans. This remains above the average of the past decade. The number of loans issued to owner-occupiers to construct a new dwelling was up 48.3% in the 12 months to November 21 compared to the previous 12 months, and the value of loans to investors was 69.5% higher in the 12 months to November 21 compared to the previous 12 months as investors respond to very tight rental markets around the country. The boom in renovations also looks to continue, they said, with lending for renovations up by 91.4% in the 12 months to November compared to the previous 12 months. Now, here's a couple of interesting observations. Firstly, of course, yes, those statistics are indeed quite strong. But remember, on the other side of the equation, people are also repaying existing loans quite fast as well. And the internal refinance data is also quite weird because, as CanStar said, there are many cheap loans around for people who want to refinance, so I don't understand why they're not stronger. Now, it will be very interesting to see what happens over the next month or two as we look at the December and January data. Of course, the unofficial lockdowns that are now in place and also the Christmas and New Year holidays will definitely have a bit of an impact. But, of course, the other point to make is that this momentum in lending, if it does ease back, will be another sign of weaker home prices ahead. On the other hand, if lending remains strong or goes stronger, then that is a predictor of stronger home prices ahead. So there's all to play for over the next few months. But as I want to remind you finally, how much bigger the loans are now compared with where they were 12 months or 24 months ago, the average loan size has gone through the roof. And that is a big problem, especially if interest rates start to rise ahead. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.